Apple is at a critical turning point right now, and what happens over the next few days could shape the stock's direction for months. There are three major developments happening at the same time: a leadership shakeup, a crucial earnings report, and a technical breakout that's already starting to lose strength. Let's break it down. First, the headline that shocked investors. Tim Cook is stepping down as CEO on September 1st. After more than a decade leading Apple, Cook will hand over the reins to John Ternus, the company's current head of hardware. This marks a huge shift for one of the world's most valuable companies, and it raises an important question: can Apple maintain its dominance under new leadership? Now here's where things get even more interesting. Apple's next earnings report is scheduled for April 30th. This will be Tim Cook's final report as CEO, and naturally, expectations are extremely high. Investors will be watching closely for any signs of slowing iPhone demand, AI strategy updates, and overall revenue growth. Because right now, Apple is not leading the pack. Since the broader market bottom on March 30th, Apple stock has gained around 9%. Sounds good, but here's the catch. It's actually the weakest performer among the so-called Magnificent Seven tech giants. And that brings us to the technical picture. Earlier this week, Apple looked like it was breaking out. The stock moved above a key downward trend line that had been in place since its December all-time high. For a brief moment, Apple was back in positive territory for the year. But that momentum didn't last. The stock has already started pulling back, dropping more than 2% after the news. That raises a red flag. Was this breakout real or just a trap for investors chasing the move? Right now, one key level matters more than anything else: around $268 near the 5-day moving average. If Apple closes below this level, it could confirm what traders call a false breakout. This is when a stock breaks above resistance, attracts buyers, and then quickly reverses, leaving those buyers stuck at higher prices. It's a classic market trap. But it's not all bad news. There is one strong positive for Apple that sets it apart from some of its biggest rivals like Meta Platforms and Tesla. While those stocks are struggling with flat long-term trends, Apple's 200-day moving average is still rising. That's a sign of underlying strength and could act as a support zone if the stock continues to fall. So where does this leave investors? Apple is in a high-stakes moment: a leadership transition, a major earnings report, and a fragile technical setup, all happening at once. The breakout happened fast, but holding that breakout is proving to be much harder. The next few days could decide whether Apple regains its momentum or slips into a deeper pullback. One thing is certain: this is not a time to ignore Apple stock, because when Apple moves, the entire market pays attention.